Okay, welcome guys to T2SMC Trader. So let's go to the top-down analysis for this coming week. Here I have to start with the Forex Factory, and in Forex Factory I just use it as my calendar to see the news in coming week. As you can see, in Monday we don't have any news, and in Tuesday we have some medium impact news. Wednesday medium impact news. Thursday we have PMI around 9:45, and Friday again the medium impact news. So in calendar actually we have nothing to get worried because of the news. Most of the days are medium impact news. Only Thursday we have the PMI. So yeah, we don't expect anything liquidity making for the news. We don't need to think like that way. Let's go to the dollar index and start from the weekly chart. Here, this is the dollar index chart. I have this buy side liquidity, I have that sell side liquidity over here. Market has traded this last parabolic up on the weekly chart. So last week, if you remember, I told that if it can come until the last week, then I will expect some kind of reaction. Until this weekly bullish, bearish parabolic up, I'm bullish. So market perfectly reached until the weekly bearish parabolic up. Now it's matter of time. Is it going through this weekly bullish bearish parabolic up, or is it coming back again for this sell side liquidity? That is my intention to see right now. If you mark the range from there to there, you can see this is the 50% of the range. This is the fair value gap which is situated around the 50% of that range. So it is extremely important for me to know, is it going to be broken? If it is broken, then I will expect this buy side liquidity will be taken. Before that buy side liquidity, I have this buy side liquidity, that buy side liquidity, they all will be taken. Here last fair value gap which is very small, that's why I don't use this fair value gap as my last fair value gap, but at the same time I have some fair value gap over here that is specifically here, these two fair value gap. I'll observe them and I believe that they will be broken if market can go through this fair value gap. So by when Monday and Tuesday and Wednesday, by 3 days, if they can break this fair value gap, maybe Wednesday and Thursday it will go toward that buy side liquidity. At the same time, the last fair value gap reaction or the middle range fair value gap reaction can send the price until this bullish fair value gap from weekly chart. So if you see, there is a bullish fair value gap as well. It can come from there to there, or there is a small fair value gap over here, which is my entry fair value gap around this area. So it can come here, this bullish fair value gap again. If you ask me what is my expectation, I'm bearish. I'm bearish for this uh, dollar index until this bullish fair value gap or that bullish fair value gap. Until these two bullish fair value gap, I'm bearish. But it all depends if it start here and then come back. I mean, went through this weekly bearish fair value gap, closed above this bearish fair value gap. By this week, I'll start to look for the bullish for this buy side liquidity. So far, I'm bearish from the weekly chart for dollar index. Let's go to the daily chart. So over here, this is the daily chart. This is the daily last fair value gap here. I'm going to put this weekly fair value gap over here right now, just to observe this daily bullish bearish fair value gap, which is actually the last fair value gap to that specific leg. As you can see, this last fair value gap is holding the price. So when this fair value gap is holding the price, right now price is inside this bullish fair value gap over here. There is a bullish fair value gap. Can it tap to this bullish fair value gap and then keep going higher? If it started to do that, I will be bullish and I will expect that this weekly bearish fair value gap is going to be broken. Okay. So from weekly chart, I'm expecting market will fall at least for these two bullish fair value gap. But from daily chart, it can simply trade this bullish fair value gap. Then it can start to go higher and it can go through this weekly bearish fair value gap. In that type of situation, I'll be bullish. If this fair value gap is broken, then I will start to look for this weekly bullish fair value gap or that weekly bullish fair value gap. I have a lot of fair value gap over here from the daily chart. I'll start to look at them, but first I need to see, is it going to break this bullish fair value gap from daily chart? So this is my first priority from the daily chart, to see, is it going to be broken or is it holding the price and sending the price higher again above this weekly bearish fair value gap. This is that fair value gap which is going to determine that if it can close below in Monday, maybe it has closed below this bearish fair value gap, bullish fair value gap, below this bullish fair value gap. I'll expect that market is coming for this weekly bullish fair value gap. Here there is very small bullish parabolic gap you can see here from the daily chart as well. So it will actually come here around this area. At the same time, after seeing 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, I mean, lot of bullish days, just by seeing one bearish candle, I can't simply say that market is going to fall for this sell side liquidity. So all I need a bearish parabolic from the daily chart to think about a short term bear move. So far, I'm bullish from both daily chart and weekly chart. So it can happen that market has tapped to this bullish parabolic and then it started to go higher. If it is broken, then in a short period of time, I'll be bearish. Maybe either for this bullish parabolic gap or that bullish parabolic gap from the weekly chart. Let's go to the 4-hour chart. So this is the 4-hour chart, and as I told, until this bullish parabolic gap from 4-hour chart is not broken, I'm long term bullish, and my expectation is market is going to take that buy side liquidity. Now, if it come here and break this bullish parabolic gap from 4-hour chart, then you know this weekly bullish parabolic gap over here, when it is broken from the I mean the 4-hour chart, then it can reach any of that area. But I'm not expecting that market is coming here by this week. That much volatility I'm not expecting because of the news. I don't have that much high impact news that can send the price for this bullish parabolic gap again from by this week. But absolutely it can happen. But in the meantime, when you see that in Friday, I told that as it has reached until the weekly bearish parabolic gap constant encroachment and to the top of this daily bullish parabolic gap, I can expect some kind of a reaction from there. So that was the reaction. In that reaction, I was bearish in Friday, if you remember. Right now, as I told from the daily chart, this is the bullish parabolic gap that I will expect to hold the price and it will go higher. If it is broken, then I will start to look for sell for this bullish parabolic gap. What do I see from the 4-hour chart? From 4-hour chart, all I'm seeing that market has traded this bullish parabolic gap. This is the order block. Market has traded that order block. This is the propulsion block. Now, can it fall for this propulsion block over here? Around this area, which is my propulsion block, can it fall for this propulsion block? And when it will fall for this propulsion block, after reaching to that propulsion block, can it expand higher again, or is it going to break this propulsion block? If it can do that, then this relatively equal lows, that relatively equal lows over there, they are going to be my target. So right now I'm observing all of this price action around this area until it is not broken, or it is not going to determine what is going to happen. I don't have any bias. In a longer term, what I'm expecting, I have already told you. But in a short term or from a very lower time frame, I have to wait to see what is going to happen in this area. Okay, so this bullish parabolic gap from the daily chart, this propulsion block from the 4-hour chart, and then it is going to determine is it going higher again or is it going to fall for a short term. Absolutely for a short term, because until this parabolic gap is not broken, I'm not a long term bearish. I'm just a short term. I can be a short term bearish. Okay? Let's go to hourly chart. Here is the hourly chart, and from the hourly chart, all I can see that market came here, went higher, took this liquidity. This relatively equal loss has taken. That was the market structure shift. This was the last parabolic gap. When market tapped to this last parabolic gap here, it should keep going higher, but it didn't do that. Instead, it has broken this last parabolic gap. When it has broken this last parabolic gap, I want to see it is not going to close above this bullish parabolic gap anymore. Okay, so above the constant encroachment, not I mean above the constant encroachment of this bullish parabolic gap from hourly chart. All I would love to see, it will stay below the constant encroachment of that bullish parabolic gap and use it as an inversion parabolic gap. But remember, this is not the inversion parabolic gap. This is some kind of parabolic gap, which is the last parabolic gap is going to, I mean, hold the price, not the kind of the perfect, inversion parabolic gap. Either way, this is going to work as an inversion parabolic gap, so you can named it as an inversion parabolic gap. So if it failed to close above this constant encroachment of that bullish parabolic gap, I'll simply expect that market will keep going, keep falling. Okay, how far it can fall? This relatively equal lows, and then here some relatively equal lows over there. It can fall for that liquidity, and then I have some more liquidity here. This is the relatively equal lows as well, so it can. I'll keep watching. Can market fall for that on in 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 a lower time frame? I don't have any bias, as I explained, until this area is not broken. When this is broken, yes sir, I will have an bias for the bearish move, and I will be very confident about this sell side liquidity at the beginning, this sell side liquidity. So here is my relative equal loss, that sell side liquidity, and after that this sell side liquidity over here, that sell side liquidity, I'll be very much interested. So until then I'll be bearish. I'll keep thinking that market will keep falling for this sell side liquidity if and only if this bullish fair value gap and that propulsion block from 4-hour chart is not going to hold the price. From our chart, all you can see above this sell side liquidity at the last fair value gap over here, which is aligned with the propulsion block with the low of the bullish fair value gap from daily chart, which is aligned with that area. So when it will tap to this area, around this area, which is my last fair value gap, above the liquidity, remember, above the liquidity, the last fair value gap is the most important last fair value gap. So here, when it will reach to this area, to this last fair value gap, I want to see it will be broken. If it is broken, market is going for this sell side liquidity. If it is going to hold the price, I'll start to think, can market close above the constant crossment of that last fair value gap? Okay, it's not the inversion fair value gap. I'm not going to rename it. I don't know how to say this fair value gap, but this is the fair value gap I explained in my fair value gap concept area, where you are going to use the last fair value gap as the opposite fair value gap. So something happened. If something happened like this here and then closed there, then I'll start to think market is going higher again. It's not coming back and going for this sell side liquidity. I'm not going to think like that way. But at the same time, if it reached to this area, I want to see it will go through this like this, boom, something like that. Not kind of reaction, dim, 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 dim. No, not like that way. I want some speed over there that will go through this last parabolic gap. The reason is I have already got the reaction from there, from this parabolic gap. So that parabolic gap should not provide me any kind of reaction, but obviously it can give me the reaction. By the way, when I'm talking about this price action, remember that the new week opening gap can simply destroy all of my analysis, because for example, the new week opening gap, market has just opened over there, just exactly over there. So if it opened over there, everything can be changed. The way I'm expecting price, it can be changed. It can simply stay in this range. It opened there, then worked with the new week opening gap and work like that way. This whole week it can work like that. So, or maybe market here and opened there. For example, it opened there. Then what is going to happen? It went little lower, trade that parallel gap, take that liquidity, started to go higher. Okay, something like that. It can happen as well. So the new week opening gap is extremely important, where every kind of analysis can be changed. Okay, I mean, if it is understandable. So that is all from the dollar index. Let's go to the E-mini Nasdaq. So this is the E-mini Nasdaq, and as you can see here, I have still this sell side liquidity here at that all-time high over here. Market is trading this weekly last parallel gap. So far it has closed one tick, maybe little above of the constant crossment of that bearish parallel gap from last week, as I'm expecting that dollar index will fall little bit because of the last parallel gap reaction. It can simply go higher little bit and until the rejection block. Not thinking about that all-time high yet. When I'll think about that all-time high, it will be cleared when I'll be in daily chart. So right now it can work little higher again. I mean, it can go little higher, work until the rejection block over there, which is here actually, not there. Sorry, until here. It can work until that rejection block by this week. But again, the new week opening gap is can change everything over here. Okay. Right now, market is struggling to decide where it wants to go. Now, so far, it seems like that market is going higher. But look at the candles. This candle came here, come back again, closed there. Then there is a very indecisive candle, went lower, higher, didn't know what is going to happen. Then this candle opened, closed, I mean, went lower, went higher, closed there. This candle opened, same thing. We went higher, went lower, closed there. So it is now indecisive. It doesn't know where it is going for to take the liquidity, or is coming back again to create some specific area. If you look at this area, whole this area, this order block is still holding the price. Okay, this is the order block which is holding the price. Now every PDRA has some kind of job. So if this order block would love to hold the price, then it should take that all-time high again. Now before taking that all-time high, I want to see how it is going to break the last parallel gap. It is all depending on the last parallel gap. For last few days, I didn't, oh sorry, for last few weeks, I didn't talk about this that parallel gap, okay? Because this is inside that last parallel gap of the weekly chart, which is over there. So this is also important parallel gap over here, which should work as a first parallel gap. So if you remember the first parallel gap logic I explained, where you don't need the market structure shift, some kind of that type of first parallel gap. This is that first parallel gap. This is that inversion parallel gap. First parallel gap, inversion parallel gap. If market trade that inversion parallel gap and didn't close above the constant crosspoint of that first parallel gap over here, there is 90% possibilities market will fall. But we will see how it is going to work around the Monday and Tuesday, because they are the accumulation and manipulation day. After accumulation and manipulation, market is going to decide where it is reaching for. Until 5th of November, I am not expecting any kind of good price action. I am expecting this type of candle, weekly candle or daily candle, where the wick will be bigger and the body will be smaller. Not like this type of candle. See this type of candle? I'm not expecting those type of candle. I'm expecting this type of candle here. So it's gonna be very, sometimes it's going to be very volatile, but most of the time it is going to be indecisive. Nobody is going to determine where it is actually reaching for and how it is going to reach over there. Most of the time high resistance liquidity run, as you have seen from dollar index and this guide, both of them are almost the similar. It is going toward the same direction. No respectation, no I mean relevance of other correlated market. For example, mini S&P, let me show you the mini S&P 2024. If you go to the mini S&P over here, you can see how it is different in mini S&P. It is extremely bullish. That was the all-time high. Market is making every week. It is making the all-time high, new all-time high. So it is extremely bullish. Let's go to YMZ 2024. Remember, they are the correlated market. That means they should go all together. They should not be like different. They are going higher, Nasdaq should go higher as well. But Nasdaq is failing to go higher. Instead, it is ranging in a certain level. This is the YM, which is Dow, and as you can see, this is the Dow candle. Okay, simply, if I ask you, brother, is Dow bullish or bearish? You can simply tell me that, brother, it is bullish. It is extremely bullish. In mini S&P, ESJ 2024. If I ask, brother, is it bullish or bearish? You can simply say that it is bullish. If I go to NQZ 2024, is it bullish or bearish? You will be confused because market is not going anywhere. It is just staying here between this last parallel gap from the last bearish parallel gap and bullish parallel gap from the weekly chart. So these two parallel gap is holding the price. It is not moving anywhere. When they are not correlated, they are correlated and not supporting each other. Both of those market has taken all-time high and making new all-time high, but it is failing take that all-time high. Even it is not showing us any sign that I'm going for that all-time high. How do I know that it is not going for that all-time high? If it really would love to go for that all-time high, it could simply close above this last parameter from the daily and weekly chart with speed. It is not showing that. If you go to the YM one more time, I'm sorry, I'm just going for every here and there. If you come over here and look at that area, it even didn't make any kind of bearish parabolic up. No bearish parabolic. It just simply keep going higher. In S&P ESZ 2024, no bearish parabolic up. No bearish parabolic up at all. It is keep going higher. Even if there was some kind of bearish parabolic up, something for a, can I show you any? No, I don't have any actually. So like here, for example, that is the bearish parabolic up. How the body has closed above this bearish parabolic gap with speed. I want to see this type of speed if it really would love to keep going higher, or if it is in extremely bullish, then it should go through that last parabolic gap with speed. Most of the time, not always, but most of the time, it should go with speed. Where Nasdaq is just, look at the speed over here. Tap, reaction, 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 reaction. It is reacting this last parabolic gap. So how can I say market is going for that all-time high? It seems like market is going for that all-time high, but I'm not, excuse me, I'm not sure yet. Is it going for that all-time high? Yeah, if you ask me, I'm better look for the sell side liquidity. I'm bearish still. I'm bearish for longer term. Let's go to the daily chart. So from daily chart, all you can see, market was extremely bullish and it was showing that I'm going higher for this all-time high until that candle. Then suddenly there is a bear candle. Look at this bear candle. Then market tried to make a bearish parallel gap, which would be the best case of scenario for me to think about the long-term bearish move, but it didn't make any kind of bear parallel gap over there. Instead, the candle tried to go through this one more time, went until that area, fall again, closed there. One more candle is trying to break this parallel gap. Maybe it will fall as well. Right now, this is the highest up close body close candle, which has traded this last parallel gap. Over here, this last parallel gap. Forget about that order block, that propulsion block. Forget about them because they're too far from the price action. Right now, market is over there where this up close body close candle has traded this last parallel gap from the daily chart. Until this daily last parallel gap is not broken, I'm not bullish. I'm bearish. Right now, I'm watching this down close body, up close body close candle, which is going to work as my turtle soup order block. So I would love to mark the 50% of that turtle soup order block either way. So let me mark the mean threshold of that order block to see if body can close below that mean threshold from the daily chart. Until it is closed below the mean threshold of that daily chart, it is extremely bearish and there is lot of liquidity. When you will be in your hourly chart, you'll see how much liquidity is over there. Still I have some liquidity here, very clean sell side liquidity, this low and that low. From 15-minute chart, you'll see this relatively equal lows is a very nice clean relatively equal lows. When market trade here, the lowest down close body close candle is here. That is your lowest down close body close candle. Trade that on, which is your order block. Then this is the propulsion block. Market has traded this propulsion block. Can it go higher? Take that highs and then keep looking for that all-time high. So at it, that is also in my mind. Think about this propulsion block. Is it going to be broken? Or is it going to hold the price and sending it higher for that all-time high? Why you are saying both of these things? Because market is in that area. Until this parallel gap is not broken, I can't simply say that all of this bullish period is going to hold the price. So I have to look for both sides. This bearish parallel, I'm sorry, that bearish order block, this bullish setup. Who is going to be the winner over here? If he is failure, remember this is much more stronger because this is trading inside the last parallel gap. So this bearish parallel gap is much more stronger comparing with this whole bullish period. If and only if market would love to go for that all-time high, then it will break all of this bullish bearish period and it will close above the daily parallel gap, last parallel gap. From the daily chart, then I will start to think about the all-time high. So far, I can see a fake breakout above the constant crossment. Still, it is not the sign I'm breaking. This last parallel gap is broken. But if there is another candle close above the constant crossment of that daily bearish parallel gap, then I will start to think that this parallel gap is going to be broken. Remember, I'm not thinking that market is going for that all-time high. I'm going to think maybe this parallel gap is going to be broken. Until it is not broken, I'm not bullish. I will look for sell only. My interest will be only selling, not for buying. Let's go to hourly chart. Why hourly chart? In dollar index, you have gone to 4 hour chart, but in Nasdaq you are going to your hourly chart. Why is that? Because for Nasdaq I don't need the 4 hour chart, but for dollar index I need weekly, daily, 4 hour and 1 hour chart. If it is all clear until the 1 hour chart, I don't need to go to 15-minute chart. But if it is not clear from the hourly chart, then I will go and stop analyzing in 15-minute chart. For Nasdaq, I want to go until 15-minute chart from the weekly chart. So it's gonna be like weekly, daily, 1 hour, 15-minute, and I'm done. Okay. So here, this is that what is I mean the hourly chart. This is the Friday price action. If you remember, this is the Friday price action. It didn't move anywhere, just nowhere. It was staying around the same range the whole day. It didn't move at all. So what happened over there? If I just remove this propulsion block, remember the daily propulsion block, I'm going to remove that line. This is that daily bearish order block mean threshold. I'm going to remove that one as well. You can keep them if you want. So if you see from the hourly chart, I want to mark the sell side liquidity. Here I have the sell side liquidity over there. This is my sell side liquidity around this area. I have this buy side liquidity around there, which is it is already marked in my 15-minute chart, so I will remove them from the hourly chart. But when I'm explaining the price action in hourly chart, let me actually explain it clearly. When market has taken that liquidity, all the buy side liquidity has taken by that run. When this high has happened, it didn't make any other buy side liquidity with previous old high. After taking all of this buy side liquidity, it has engineered the buy side liquidity inside the leg. Okay, inside the leg, it has engineered the buy side liquidity. So this high has made the buy side liquidity, and inside that leg there is another engineering buy side liquidity. This engineered buy side liquidity can be happen here or here. It doesn't need to be made over there. That is different. That means this high has made the buy side liquidity with previous high, and after this high has cleared all the liquidity and then engineered the liquidity inside and below that high, which is absolutely different. What do I mean by that? When it has cleared all of the buy side liquidity, it fall and cleared all of the sell side liquidity. Then this is the low, which has cleared all of the sell side liquidity. In the meantime, it has made a sell side liquidity with previous old low. See, that means this low has created the sell side liquidity. The low has taken the liquidity. Same low has created the liquidity. Here, this high has taken the buy side liquidity, but didn't make the buy side liquidity. Then it has engineered liquidity. So this and that, they are different. If you compare this buy side liquidity with this sell side liquidity, yes sir, this is much more stronger. Then, for example, it didn't make any sell side liquidity, but after that maybe it has engineered the liquidity here. See in the below here, this low and that low, relative equal lows. It is also different. Then this high and that high and that low, they are the same, and I have this engineered liquidity, I have this engineered liquidity. But when this high has taken the liquidity, I would love to look for the bearish PDRA, because it didn't make the liquidity. At the same time, when this low has taken the liquidity, at the same time the engineered the liquidity, I am pretty much confident that market is going to fall again to take this sell side liquidity at least. After taking this sell side liquidity, I would love to see, is it going to generate another liquidity maybe with this low. Okay, so this is the low. Maybe with that low, it is going to make another sell side liquidity here. It can happen. In that type of situation, it is gonna be another sell side liquidity, which is going to be much more important comparing with that buy side liquidity. Or maybe it will take that liquidity and it will trade maybe this last parabolic gap. See this last parabolic gap? So it has traded that last parabolic gap. So it didn't made or engineered any other liquidity. Then this buy side liquidity is so obvious to me. So if you ask me right now, I'm thinking that market is going, oh, sorry, not like that way. So right now, all I'm seeing that market has taken the buy side liquidity, then this is the bearish parabolic gap. Market engineered liquidity, trade that bearish parabolic gap. Where is my highest up close body close candle? Here, which is going to work as my order block. So I will mark a line from that order block. So here, I would love to mark the open, and I'm going to extend it to my right. I'm seeing this is my order block, which is actually holding the price, and it is going to send the price for this sell side liquidity. Until this order block is not broken, I'm not thinking that market is going for this buy side liquidity, or it is going for that buy side liquidity with speed or something like that. After that, then all time high or every other things. I'm not thinking like that way. From a short period of time, I want to see market will keep falling and take that sell side liquidity. Now, maybe it wants to take that sell side liquidity after cleared that all-time high. In that type of situation, what happened? Market has taken all the liquidity, then market has given me the market structure shift. Here is the last parabolic gap. See, market has traded the last parabolic gap here. When it has traded the last parabolic gap, I want to mark the lowest down close body close candle, which is my order block. So over here, this is my order block. Now, as you can see, this specific candle has created that order block. Okay, let me show you that specific candle has made the order block. Until that candle, there was no bullish order block. So here, because this candle didn't close above that candle. Why is that candle? Because this is the lowest down close body close candle, which has traded the last parabolic gap over here. So when it has created the order block over there but failed to trade this order block, what does it mean? That means it is the unfinished business. Market should finish this business. So what can happen? Market can come back again to this order block, then it can go higher for this buy side liquidity. If I think that this sell side liquidity is has been generated like this, like that sell side liquidity. Remember the from the daily chart, the extreme liquidity, like it has generated this sell side liquidity, traded the order block, and then it is reaching for that all-time high from the weekly chart. So is it going to generate that sell side liquidity from hourly chart, is now going for that buy side liquidity? After taking that buy side liquidity, then different matter, is it coming back again for this sell side liquidity, or is it going to take that all-time high and then coming back again for the this sell side liquidity and finally for this sell side liquidity? That is different matter, and we'll talk about that later. But right now, if it even would love to go higher and take that buy side liquidity, it should come back again to this order block because it is unfinished business. So either way, I'm bearish until this order block is not broken, because I need a PDRA that is going to give me the reaction. This is that PDRA, order block reaction to order block. Okay, the PDRA reaction. I have already talked about this in my members only video, the reaction and reversal, order block to order block, fair value gap to fair value gap. I guess it is inside the reaction versus reversal members only live. So here, this order block reaction, I'm expecting that market is falling for this order block. So at the beginning, I'm expecting just the just the bear move, at least until this order block. Now I can be wrong. How you can be wrong? Maybe the Sunday market opened there. Okay, for example, it opened there, trade this order block, started to go higher. I can be wrong absolutely. Or maybe market has opened around Sunday here, around this area. Market opened there, so there is a volume balance. So what then market do? Market simply closed this new week opening gap, used that new week opening gap here, then fall here, then started to go higher end. This thing can also happen. So the new week opening gap can destroy my analysis. Remember that if the new week opening gap is very big, then most of the time the weekly analysis doesn't work. If it is too big, okay, but if it is a smaller uh, fair value gap, then it's okay. Are you guys providing any message? If you are providing any message, I'm so sorry to check them, because I need to finish this first, as I will upload this to YouTube. So I need to finish this first so that I will be able to upload it to my YouTube channel. Okay, so please hold your question if you have any. So that is what I'm thinking right now, that this order block will hold the price and send it at least for this order block. Then I'll observe this order block, how it is going to work. If it is broken, the main threshold of this order block is broken, this sell side liquidity will be my target. If it doesn't broke, or it tapped to this order block and then started to go higher, I'll be in indecision until market doesn't break any of this order block in this area. Why you are so much confused around this area? Because right now market is inside this daily last parallel gap. So from the daily chart or the weekly chart, I'm confused. From the very high time frame, because market is in last parallel gap. When it is in last parallel gap, I'm very confused. From dollar index, I'm expecting market to fall little bit. So I should keep thinking that market will go higher for that buy side liquidity. That doesn't mean it can't take this sell side liquidity before going higher for this buy side liquidity. So it doesn't mean that. So dollar index is not going to determine the Nasdaq bias, but the Nasdaq bias is going to determine, is it going to be the high resistance liquidity run or low resistance liquidity run? If it is going against dollar index, then that will be low resistance liquidity run. If it is going with dollar index bias, then it is going to be the high resistance liquidity run. So I'm going to remove this what to say, the sell side liquidity and buy side liquidity, because it is marked in my 15-minute chart. So here is my 15-minute chart, and all you can see right now, market has traded this buy side liquidity, sorry, that bullish parabol cup over here. I have that clean buy side liquidity over here, a very nice clean buy side liquidity around that area from 15-minute chart. I have this sell side liquidity here and that sell side liquidity there. This is that order block from the hourly chart. Can it trade until the consequent crossment? I want to see it will trade that consequent crossment of that fair value gap before even falling. So if it would love to even falling for this sell side liquidity and that sell side liquidity, it has to reach until the consequent crossment of that fair value gap, bearish fair value gap. The reason is, look, the way it has been rejecting from this area. At the same time, it has engineered the buy side liquidity. So what is wrong? If it can take that buy side liquidity, then it can fall. That is the best case of scenario for me. I don't like those type of clean highs. Now this high has taken that high by 1 or peak, I don't remember, but this high has taken that high. Still, this is a very clean highs. I don't like this type of clean highs. I want to see that it will go higher from the 15 minute chart. It will go higher, take that liquidity, trade that constant investment, then it will fall. Now you can say, brother, in that type of situation, you told that from the hourly chart you were expecting market is going to fall. Why you were expecting the bull move then from the 15 minute chart? Remember, the order block is here. This whole candle is the order block. Now, if I have this order block, I also have the min threshold of that order block. If you mark the 50% of that bearish order block, you will see that is aligned with the 50% of this bearish fair value gap. So there is nothing wrong if market trade the min threshold of that bearish fair value gap before falling. At the same time, from the 15 minute chart, below this buy side liquidity, I have this last fair value gap from the 15 minute chart. So until this last fair value gap is not broken, I can't think about this buy side liquidity. I should keep thinking about the sell side liquidity, which is over here, because market is already very far from this last fair value gap. This last parabolic reaction sent the price until the order block here, until this, or I mean the hourly order block, or the last parabolic gap, or the recent created parabolic gap, where I expected it will be absolutely unfilled. Market is not going to touch it, but when it has touched it, okay, it has touched this parabolic gap, come back again, trade this parabolic gap. That means it has to reach until this constant crossment. What else can happen? If it is overzealous, it can trade until the high, but it should not be broken. At least it should leave any portion open of this fair value gap. Any portion that should be open before even falling until this border block around this area. So this is my expectation. But yeah, again, everything everything can be changed by the weekly open. If the weekly open is very big, maybe my analysis is going to be fail. But otherwise, I'm just going to think about the bearish move for Nasdaq, at least for this sell side liquidity and that sell side liquidity. I'm willing to look for sell. If it wants to go higher, it has to break this last parallel gap, then it can take that buy side liquidity. In that type of situation, I will think about this sell side liquidity, all of this sell side liquidity for longer period of time. It is going to be there for longer period of time, and market will actually go for that all-time high first. Maybe then it will reverse, or maybe until it will reach the rejection block from the weekly chart. If you remember, it will reach until that area, then maybe it will fall. Okay, so that is all about this weekly analysis. Uh, I hope that I'll be able to upload it to my YouTube channel. Yeah. So that's all. So I would love to see if you have any question right now. Okay.